Hi, everybody. Welcome to this morning's webinar presented by BHPSNY. I'm going to hand things over to Susan now.
Good morning, everyone. I hope you're doing well, and I look forward to covering this session with you. Today, we're going to talk about the duties and responsibilities of a board of directors. We're going to cover a variety of issues, including the legal and fiduciary roles and responsibilities, right? So these are really the high-level responsibilities that board members have as the fiduciaries for the organization, as the trustees or the board members. I'll use those words interchangeably, whether it's board of directors or board of trustees in your organization. They really have the same responsibilities. We're going to talk about some of the important components of the Nonprofit Revitalization Act. Although the act has been in place for more than 4 years, we still encounter organizations that have not fully implemented those components, and who are also struggling to adapt or integrate them in ways that really serve the organization and also meet compliance expectations. So we'll talk about the components of the Revitalization Act, and then I'm going to walk you through kind of 8 areas of the board's policy and monitoring functions. These areas really are about, how a board pragmatically carries out its responsibilities in the areas of governance. And one of the things we're going to talk about is, distinguishing between governance and operations. And we'll get to whether some of you are all volunteer organizations and don't have staff, which makes it even more challenging to really get that line clear. And there's no hard and fast line, but it is important for organizations and boards of directors to remember that they have to carry out those legal and fiduciary governance related responsibilities. So, in terms of the board's role as fiduciaries, right? Board members really provide the leadership for the organization. Nonprofits don't have owners, we don't have shareholders. So, really, in your leadership role as board members, you have both, obligations in terms of the requirements of not for profits, of contracts, of all of those things. But you also have an incredibly powerful opportunity to influence the work of the organization and make a difference in people's lives, in your community, in telling the stories of our histories, of in our communities. So part of the challenge is in carrying out the work of the organization. How do you balance, right, your need to exercise power, but because boards are collective bodies, right? We don't have power as individuals. Boards have power collectively. How do you then utilize your influence to make effective decisions on behalf of the organization, both in terms of working with your fellow board members, in terms of working with staff, and obviously also in terms of working with your community, influencing your funders, your members, and others who might be attending or participating in your programming. So one of the things that I think is important is that leadership, there's a lot of talk out there about what is leadership. And leadership really varies from organization to organization. It's a process. It's really about your mission and your culture of the organization, the services you provide, and it's also about the position, in terms of your role. If you're an officer on the board, if you have a strong personality, if you're laid back, if you're very facilitative or engaging as a leader, as a board member, as a facilitator. Some organizations have board presidents, for instance, who have been a founding president. They've been there for 10 or 20 years and who are seen as really the key leader and spokesperson for the organization. In many other organizations, is a much more, there's more turnover, perhaps. The role of leadership, whether it's as a president or other officer, is more fluid, that there are term limits, that's really about the collective and the process. Some leaders are, I'm sure you've experienced this, as committee chairs or presidents or officers, very knowledgeable, very confident. They know where they want to take the organization, and others perhaps less so, or their skills in meeting facilitation or in decision making or in negotiations are less strong. But ultimately, I think what's really important to remember is that board leadership is best and strongest as a team experience where the power and the roles are distributed among all of the members. Because one of the risks of having, one particular strong leader who does not necessarily engage others in that process is that when that person leaves, the organization does not have a depth in its bench, that there's nobody lined up to take over. And so part of building board leadership is really thinking about the long-term sustainability of the organization, and building leadership, building knowledge, building commitment to the organization. And that's kind of what we'll talk about when we're talking about board development in a little while. So I just want to remind you that, with nonprofits, of course, everything starts with the mission. That's why we exist. They are our, core tax exempt purposes, right? The activities that we carry out flow from the mission. It's important for nonprofits to have a diversity of public support, right? So sometimes organizations, otherwise they'd be clarified as a private charity, or a private foundation. And we see this with organizations perhaps that are given in their startup a large piece of land or a large building, and that is the primary source of income for several years, and the IRS then essentially re-establishes them, repositions them as a public, private charity or private foundation. So one of the things that nonprofits need in carrying out our mission is to be able to demonstrate diverse public support for our purposes. Um, in terms of our mission, one of the things that's important is that, it effectively defines the scope of the activities, who you're trying to serve, your community, what you want to accomplish, right? So as you when you first incorporated, when you first became an organization, you filed either your certificate of incorporation, or for those of you who are chartered, became chartered through the Department of Education. And those, charitable purposes, are kind of your legally defined mission, right? The things that you as an organization can do and therefore are exempt from paying taxes on. You're tax exempt within the confines of that mission. If you do activities outside of that mission, you may be subject to unrelated business income tax. So it's important that you, as board members and all of the board members, understand what's in your charter, what's in your certificate of incorporation. And one thing that's important to remember is that the Board of Regents actually requires chartered organizations to review their mission statements. You don't have to change them, but you're supposed to review them every 5 years for making sure that they're still relevant, making sure that they're still driving your purposes, that they are compliant with your charter. And the other thing to remember is that if you change your purposes or your mission, the IRS Form 990 has a box that asks you that. And if you have an accountant or auditor, CPA who fills that out on your behalf, they need to make sure to know that you did in fact change your purposes So make sure you communicate with them. Um, you know, the mission is something I think of like a Pledge of Allegiance, right? Everybody should be able to articulate your mission statement and your purposes consistently, and really use it as a way of driving decision making and priority setting, and certainly, as we'll talk about, as an important component of strategic planning as well. So, you know, in terms of the board of directors, right, as I said before, we don't have owners or shareholders. The board represents the public interest. And essentially, because nonprofits receive money and spend public money and are exempt from paying many taxes, right, it's really important to make sure that those charitable dollars are spent in the public interest within the context of your organization's mission, and that board members are fully accountable for how those funds are spent, right? They are the ones responsible. The board, you know, uh, is the decision making body, is the fiduciary. They can delegate responsibility to staff if you have staff, but they ultimately are the ones who are responsible. So, you know, I'm going to revisit this idea of fiduciaries, right? Fiduciaries act for someone else's benefit. So you make decisions on behalf of someone else's resources. You spend money, you determine how to invest money, how to distribute that money. And so there's a really important component about being responsible for someone else's money, the collective good, the public beneficiaries of your mission. And ultimately, right, board members need to act in good faith, right, with that degree of diligence, care, loyalty, and skill, right, which ordinarily prudent persons would exercise under similar circumstances and like positions. So what does that mean? You know, essentially, it's a common sense principle. It really looks at, are you acting in the organization's best interest? Are you acting in your as a fiduciary for the mission, for the purpose, for the beneficiaries of your organization? And in practice, these are carried out through three legally defined duties: care, loyalty, and obedience. So we'll talk a little bit about each of those. The duty of care is really the pay attention duty. And this is where it's so important for board members to be engaged, for them to understand and know what's going on, for board members to really be reasonable in their decision making, to not take unnecessary risks, right? That every organization has a different level of comfort with risk and with managing risk, and with some are much more entrepreneurial, some are much more steadfast in how they carry out their work. But however that it carries out, it's really important that, you know, organizations and boards deliberate in a way that is reasonable for the organization. In participating and as an individual board member, it's important that board members are prepared for their board meetings, right? That they attend board meetings regularly and that they actively participate in meetings. And so, you know, many organizations have board members who either don't show up or who come unprepared, or perhaps the boards themselves don't have a good agenda. They're not sent out, you know, before the meeting. Information is not provided. And so board members really are set up to not be able to be high performing, right? So part of this is really about how you as an organization provide the information that board members need in order to be effective, high performing board members. One of the things that's really important in terms of carrying out the duty of care is that it is the very act of deliberation that demonstrates that the board has done its due diligence, right? It is the act of due diligence and deliberation that really demonstrates the board's fiduciary responsibilities, that the board is paying attention, that it is not only the right, but it is the responsibility of board members to ask questions and to inquire and make sure you're getting the information that you need to make informed decisions, right? So it's not really okay to just kind of rubber stamp decisions, particularly ones that might have a major financial implication for the organization. It's important to be certain and comfortable that when you are perhaps taking out a line of credit, that you feel confident that the organization will have the resources to pay that money back in a way that is, in compliance with the loan. Uh, you also want to vote your opinion in terms of what is in the best interest of the organization. So you don't want to go along to get along. You want to make sure that you are voting based on what you believe is in the best interest of the organization, given the information that you have. It's okay. Sometimes we learn that we didn't make the right decision or that there's additional information, and we can always, you know, address that in the future. But part of this is really about, balancing the collection of information and the ability of the organization to act and make decisions. One thing that's important is, particularly for those of you who might be a secretary, is to make sure that your minutes document the exercise of care and the proper conduct of decision making and action, so that all of your votes are recorded, that there's enough information in your minutes to demonstrate the due diligence process. You don't need so much information. You don't need a blow by blow of who said what, but you do want to make sure that you can document the exercise of care. You also want to think about if there was a decision that was contentious, if people voted no, right? That should be reflected in the minutes, because your minutes are really a legal document, right? And if the organization had a legal concern about the decision and you voted no, it could provide a level of protection for individual board members. It's important to remember that voting no is not the same thing as abstaining. Abstaining means I have a conflict of interest, or I don't have enough information to make a decision, right? So if you were not at the last meeting and you want to abstain from approving the minutes, that might be reasonable. If you're a new board member and you're being asked to approve the budget, that might be a reason to abstain. But overall, the board needs not to abstain on a regular basis. It needs to take responsibility and act as individual board members see what is in the best interest of the organization. The duty of loyalty is really about making decisions in the best interest of the organization. It's about avoiding conflict of interest. So the duty of loyalty is really about being faithful to the organization and being publicly supportive of the organization. We've seen organizations where board members do not like a decision that was made and take it to Facebook and they start bad mouthing the organization. And that is very clearly a violation of their duty of loyalty. That if you disagree with an action or a decision, you are responsible for addressing that action or decision within the body of the board, not in public, right? So fundamentally, the issue is to disclose and avoid conflicts of interest, right? So there are the Nonprofit Revitalization Act, and we'll talk about this in just a second, really firmly described what are the components of a conflict of interest, right? Many of those are much more above and beyond what any nonprofit would allow to have happen. So you need, as an organization, to very clearly define conflicts of interest, and also it's not just what legally defines a conflict of interest. It's also about public perception. If the community sees your organization or your board as engaging in activities that are transactions that appear to be a conflict of interest, it could undermine their integrity in their sense of confidence in your organization, and that could really jeopardize, your funding, your donors, your constituency base. So, what's really important is now, as part of the Revitalization Act, that every organization has to have a policy. Every board member has to disclose potential conflicts annually, as well as when, in a situation when a conflict comes up and you weren't aware of it. So the duty of loyalty is really about making sure that board members act in the best interest of the organization. The duty of obedience is also one that basically says that, you need to follow the laws and regulations that govern the organization, that you don't get a free pass for, doing a good job, right? So some of those things are about abiding by federal, state, and local laws. So the IRS regulates, fundraising for nonprofits. We're all subject to their oversight. We have disclosure requirements in terms of, if a donor gives you $250 or more, you have to send them a letter. Certainly, we should do that for every donor. But state laws, we're subject to the same labor laws that any other employer is subject to. We're subject to local zoning laws. If you've got a facility, you might need to have to follow signage laws, or zoning laws in terms of snow removal or those kinds of things. So the board is ultimately responsible for making sure that the organization's policies and practices follow federal, state, and local law. As I mentioned earlier, the board is responsible for making sure that you're complying with your certificate of incorporation or your charter and any amendments to those. So, for instance, your charter or your articles of incorporation might say that you have 17 board members, but over time you've reduced that to 11 to 13. Your bylaws are then in conflict with your certificate of incorporation or your charter, so you need to go back and amend your charter. Similarly, many organizations were formed as membership corporations, but over time, functionally speaking, they eliminated the membership. The members no longer vote for the board of directors. If your charter says that you're a membership corporation, you need to go back and amend your charter to remove the membership. And the only way you can do that is for the membership to vote itself out of office, right? So part of that is really making sure you're complying with your charter and amendments and not-for-profit corporation law and Board of Regents regulations. You've got to follow your bylaws. Your bylaws are a really important document and tool that every board member should have. The board should collectively review them on an annual basis. You should periodically review and revise them for legal compliance, making sure you're, consistent in practice. We'll talk a bit more about bylaws in a second. If the organization has contractual obligations, whether those are with funders or with contractors, with consultants, with construction companies, you as a board may authorize your executive director to sign that contract, but ultimately that contract is with the board of directors, right? And you are ultimately responsible. So making sure you have good, solid policies that, determine the authority of the executive director around contracts can be a really important risk management policy. And in terms of, obedience to board decisions and board policies, that, as I mentioned, you have to respect the board process, that board decision making. The board only has power through collective decision. So you need to respect that board process, follow it, utilize your committees or your board appropriately, understand and support those decisions that were duly made, and also follow the established chain of command, that if you're not the authorized spokesperson for the organization, such as the president or the executive director, that you do not go out to the media and speak on behalf of the organization, or that you don't sign checks on behalf of the organization or obligate the organization to carrying out any activities without having the authority of the board of directors, right? So even officers and others, their authority comes from the board of directors. The board can limit the authority of any individual board member, on behalf of the organization. So it's important, again, to remember that the collective body has the full decision-making authority at the board level. So this is what I call the be afraid, be very afraid slide. That board members have to manage your risk. That ultimately you have the legal responsibility for the organization. You're responsible for any error or neglect under New York, and there are New York State immunity laws, there are federal immunity laws. The thing is, and one of the reasons that as an organization, Nikon is so clear that we believe paid staff should not be voting members of the board of directors, is that the threshold that if you're serving as a paid board member, it's not illegal to pay board members, but it is not advisable because it's an inherent conflict of interest, that the standard is ordinary error or neglect of fiduciary responsibilities. If you're serving as a volunteer, the standard is gross error or neglect, which essentially means it's close to criminal intent. It is clearly that the board is not looking at the finances of the organization, that the board is not meeting, that the board is not supervising the executive director, that the board has not developed and approved personnel policies, right? But there's a gross error or neglect that you would say, wow, they really were asleep at the wheel. Ultimately, that you are responsible if you violate the law. If the organization violates the law. What we see is 80% of lawsuits against nonprofits are employment related. So personnel is a really high area of risk. And board members absolutely want to limit their engagement and role in personnel matters. And we'll talk about what that looks like in terms of obviously the board's responsibility for hiring the executive director and supervising the executive director. Board members can be found liable and responsible for violating the bylaws. I've seen organizations where board members have sued other board members, or the membership has sued the board for violating its bylaws. So again, you want to make sure your bylaws are followed, that they meet your needs. Otherwise, you want to change them. Board members can be held responsible for the misappropriation of assets, right? That if there's theft, and the board was asleep at the wheel, they could be found responsible for them. Ultimately, if the organization has to go out of business, right? If the organization has to close, you're going to dissolve, you're going to merge, the organization cannot shut its doors if it has unpaid payroll taxes or other taxes or unsatisfied corporate debt. And so it is possible that the Attorney General's office could go after individual board members for making sure that those, that debt is paid before the organization can shut its doors. Okay. So ultimately, this is going back to your due diligence process and making decisions that you as a board absolutely want to make sure that your payroll taxes are being withheld, that they're being filed, that your federal tax forms, your 990, your char 500, if you have to file that, and any loans that you might take out, or you have a plan of action for how they will be paid off. So board members do have protection, right? So the immunity laws protect volunteers of nonprofit organizations from lawsuits. The problem is that it doesn't protect the organization. So nonprofits can be sued, um, and individual board members can be sued, the board as a whole, or individual board members for allegations of gross negligence. So, because we do live in a litigious society, you're sued, you still have to defend yourself. And that's why insurance is such an important component. That directors and officers liability insurance will provide coverage for your defense, as well potentially as the for settling any lawsuits if you're found not to be grossly negligent. But ultimately, what's really important is for boards to practice good risk management. That on a regular basis, collectively, you review your bylaws, that you review and revise as necessary your personnel policies, that board members participate in meetings, attend meetings, are prepared for meetings, that they follow the chain of command, that they don't make decisions that they're not authorized to make, and that there's a really good sense of collaboration and teamwork among the board for holding each other responsible and accountable for managing the risk individually and collectively. So one of the things I just want to make sure that you're all familiar with is the Nonprofit Revitalization Act. So uh, this pretty much became effective in 2014. There were a few changes in the law that came, clarifications around conflicts of interest just last year. But ultimately, what it did was it provided some electronic age updates for board and committee and membership meetings. So now it just recognizes that email is a form of communication, that nonprofits utilize their website for publishing information about their organizations. And so it provided some updates for electronic communications. It allowed for boards to meet by teleconference, right? Just um, many boards had that in their bylaws already, but it became the law updated to allow for that. It now requires every organization to have a conflict of interest policy. It strengthened the definitions of conflict of interest, and it significantly strengthened the requirements for policy, for disclosure, for reporting, and documentation. One of the things that actually made it easier for nonprofits is that it increased the audit threshold, but it also increased the audit oversight responsibility. So now organizations used to have an audit if their budget was $250,000. Now they're required to have an audit. That went up to 500,000. It went up to 750,000, and in 2021, that's going to go up to $1 million budget. So you still need a financial review if your budget is $250,000, but you don't need a higher level and usually more expensive audit unless your budget meets $750,000. But along with that, it really increased the board's oversight around audits. It required you to really have active involvement in selecting the auditor, in verifying the auditor's independence, in meeting with the auditor, in ensuring that the board, if you have an audit committee, that that committee is made up only of independent directors so that there are no conflicts of interest associated, with the audit process. It did require a whistleblower policy for organizations with 20 or more employees and a budget of $1 million. So smaller organizations are not required to have a whistleblower policy, but it is a good practice for all organizations to have. And a whistleblower policy essentially establishes the policies and procedures for if there is a violation of law or if somebody feels that there's a misappropriation of funds, that there's a direct line to the board of directors from staff or from other board members. There are some improved processes for amending your certificate of incorporation, and also for streamlining mergers and dissolutions, um, and also for real estate transactions that are part of an organization's normal business. So there's still high expectations if you're going to sell your museum or you're going to sell your business, your primary asset. But if an organization, for instance, is a housing organization that does real estate transactions all the time, they don't need to get as high a level of threshold of decision making at the board or membership level. The law provides for greater authority for the Attorney General so that some actions, including mergers or dissolutions, can be determined by the Attorney General, and they don't actually have to go to a judge as long as there are not complications. The Revitalization Act redesigned your committee structures for committees of the board and committees of the corporation. So we'll talk about that in just a second, just so everybody's clear. It also defined what constitutes the entire board. And this is an important component for certain key decisions, major decisions of the organization. So if your bylaws, for instance, say we have 15 board members, right? 15 is your entire board, regardless of how many people are actually in office. So if your board has 15, your bylaws say 15 board members, you only have 9 board members, and you have a decision that needs a majority of the entire board, you would need essentially 8 out of 15 board members to make that decision. If your board needed a 2/3 majority, you wouldn't actually have the number of board members necessary to make a decision. So it's important for consistency. Now, if your bylaws say we have between 13 and 17 board members, and at your last election you have 15, then 15 is your entire board. So it is a good practice to have a range of board members in your bylaws rather than a fixed number, particularly if you find yourself with, out of compliance. And as I mentioned before, staff can serve as voting board members or as chairperson of the board. We see that for CEO presidents, for instance. We don't recommend it, but if you do have staff members serving as chairperson, that needs to be approved by a 2/3 vote of the entire board. Okay. Okay, so conflict of interest. As I mentioned, the state law requires you to have a policy and a procedure for how people disclose conflicts. That as a board, you must consider alternatives and you must be able to articulate and demonstrate that if you are going to select a contractor that is a board member with a conflict of interest, that transaction is fair, reasonable, and in the best interest of the organization. So it is not illegal to do business with board members, and very often we do find that board members, for instance, they might have a roofing company and you might need a new roof. And they might say to you, I will donate the materials, you only have to pay for the labor, right? But how do you know that they didn't jack up their labor costs? You get other quotes, right? So you might have a policy in place that requires you to have 3 quotes for purchases over a certain amount. And that becomes part of your documentation around conflict of interest. It's important that the person with a conflict cannot be present or participate in any deliberations or in voting, right? Nor can they make any attempt to improperly influence the decision. They can't take board members out for dinner and get them to vote on their contract or anything like that. They can't exert influence over staff or the executive director. That they really need to let the process unfold, without any influence. For our board, you need to make sure that you document that all of these policies and procedures have been followed in the disclosure, in the deliberations. You need to, if you're going to engage in the transaction that involves a conflict of interest, you need to identify the reasons, and you need to put those in your minutes, right? As I said, that the person with a conflict cannot be present during the deliberations or vote. So if you're discussing these matters as a board, that person should walk out of the room, and your minutes should very clearly document that that person was not in the room at the time of the transaction. You also want to make sure that annually each board member proactively signs disclosures for any actual or potential conflicts of interest. The thing about this law, though, is that it's not just about the individual board member. Conflicts of interest come up when their spouse or domestic partner owns a business that might have a transaction with the organization, when their child, when the partner or spouse of their child, right? So it really is about the extended family and what and who might be part of that person's essentially constitute their conflict. So it's important that we understand this, that they understand that they need to disclose the relationship with vendors, both annually and when a situation comes up. So you might be having your annual gala, and you might be looking for a caterer, and Sally Joe's Catering might happen to be Sally Joe might be the child of one of your board members, and you didn't know that, and you never thought that, and Joe didn't think that that was going to be a conflict. But then Joe has to disclose that, at the time when that is being considered, and then you follow your policies around conflict of interest in terms of not being participating in deliberations or voting. In terms of the new rules on committees, the two committees are committees of the board and committees of the corporation. So committees of the board cannot bind the board. They cannot act on the board's behalf. They can only be comprised of voting board members. You have to have at least 3 voting board members serving on those committees. If you want others to serve in an advisory capacity, they cannot be a voting member. So maybe you have, your finance and audit committee has an investment advisor on there, but they're not a board member. They can advise the committee, but they cannot vote on any decisions. That committee members of the committee have to be appointed by a majority of the board of directors, right? So the board needs to formally approve those people to that committee because they are making decisions on behalf of the board. So they want to have the faith that the people serving on that committee are the right people. It's important to remember that no committee has more authority or power than the full board. So no committee can fill vacancies on the board. No committee can fix the compensation of board or committee members. No committee can adopt or amend bylaws or corporate documents. And no committee can amend or appeal board resolutions, right? So none of them can overdo anything the board does on its own. The committees of the corporation are ones that really cannot bind the board. They cannot act on the board's behalf. They cannot make decisions. They might implement board directives. They might conduct due diligence on the behalf of the board. They can't obligate the board to spend money or to establish policy or engage in contracts in any way. They too must have 3 members, but they can include non-board members as voting members. So for instance, if you're a membership organization and you have a program committee, that committee would be a committee of the board. You can involve your membership. You can involve non-board members. Fundraising committees are great committees of the corporation. Uh, Program committees might be great committees of the corporation. Uh, the law specifies that committee members of the committees of corporation are to be appointed or elected the same way as officers as stated in your bylaws. So if your bylaws are silent, if your board approves your officers, then members of committees of the corporation would also be approved by the board. If your members approve the officers, then if your bylaws don't claim otherwise, then your membership would have to approve people serving on committees of the corporation. So you want to be clear about how those members are appointed to the committees of the corporation. The thing about the law that was really unclear was that committees of the corporation really can be accountable to the board, they can be accountable to your membership, or maybe even to the executive director and staff. So personally, I don't believe that if it's an advisory committee to staff, to your executive director, I don't believe that it should be in your bylaws, right? That it's much more of an operational thing. So I would suggest that only those committees that are accountable to the board of directors or your membership be included in your bylaws anyway. And then maybe think about, you can have work groups. So one thing, it's really important is that to remember that committees in general must have 3 people. So if you're delegating work and activities, you can do that and create assignments for individuals and create special projects, but you can't call them committees. They can't do the due diligence of the organization, and they certainly can't bind the board or the organization. So, just a couple of thoughts about committees. I see organizations that sometimes go crazy with their committees, that they have more committees than they do people. And I think you really want to be strategic about the committees that you establish. You certainly want to establish committees because it's clear that there are too many issues. Issues are too complicated to be handled by the entire board, that you're not going to get to the deliberations at a board meeting. So it's great to set up a committee to look at the issues more in depth. They provide a really good opportunity for board members to utilize their time and expertise. That committees can be a really great tool and a really great opportunity between, especially for those of you that have staff, to communicate between staff and board and to translate policy into practice and to identify areas where practice needs a policy to guide it, right? So it's a really good educational process around understanding that balance and that translation between operations and governance. It's a great way of getting people to be more engaged. That some people are much more comfortable speaking around issues they're comfortable with, they're knowledgeable about, in a group of 5 or 6 people versus a group of 15 people. And the other thing about committees are that you can really use them to engage experts or stakeholders or potential board members, so that by bringing on volunteers or members, or other experts onto a committee, you get to see how they work, how they understand the organization, they learn, and you can decide if they would make a good board member. So it can be a really good onboarding process if you're able to think about it from a long term perspective. I would suggest that you think about, in terms of the number of committees you have, right? That realistically, you have board members serving on one committee, and no more, except for maybe officers, right? Sometimes you have your treasurer is going to serve on the executive committee and your finance committee, for instance. That's just, the way it's going to be. But other than officers, is try to limit the number of committees that you have to the number to one per board member. So if you have uh, you know, 9 board members, maybe you think about only having 3 committees, unless you're able to then bring on non-board members onto a couple of those committees, a fundraising committee or a program committee or board development committee. You don't want to set up too many. For those of you who are all volunteer organizations, you might want to think about distinguishing between governance committees and operational work groups, just so that the work of the organization happens as well as the governance, and you can engage non-board members in much of the operational work. We'll touch base about that in just a few minutes as well. So one of the things that's important for boards is really understanding the accountability landscape, who they're accountable to, and what they're accountable for. And so there are 2 different types of corporations in New York, right? There are membership corporations and there are self-perpetuating boards of directors. So if you have a voting membership, and I just want to stress that of having a voting membership, there are legally defined responsibilities, and rights for members, which is different than if people pay, you have a membership for fundraising, and people pay $40 a year so that they can come to your museum whenever they want, right? That might be a transactional relationship that may or may not include a legal membership where the members vote for the board of directors. So in this context, I'm really talking about it as a legal component where members have rights and responsibilities. So board members are clearly accountable to the members. The members elect the board of directors. That but in a self-perpetuating board, the board is accountable to itself in terms of replenishing itself. The board is accountable to the IRS, right? The IRS regulates nonprofits, regulates fundraising activity, charitable activity at the federal level. Just like the Board of Regents, Board of Education, and not-for-profit corporation law and the Attorney General do at the state level. So, New York State is one of about 8 states that has a separate not-for-profit corporation law, that most of the components of the not-for-profit corporation law chartered organizations have to follow. There are a few components that those of you that are chartered do not have to follow, but in general, most of the nonprofit corporation law is effective as well. The Attorney General's office regulates fundraising at the state level. We have to file our TAR 500s, right? The Attorney General has oversight in terms of violating the law. The Attorney General can go in and investigate and close in case of allegations of misappropriation. Nonprofits, although we typically think of ourselves as exempt from taxes, there are still times when we do need to pay taxes, unrelated business income tax, for instance. Certainly in terms of paying payroll taxes. Nonprofits are subject to the Department of Labor and labor laws. We are not exempt from any laws related to labor. Nonprofits often get into trouble around issues related to, for instance, interns. Right? There's stricter requirements around what constitutes a free paid internship versus having to pay interns, or minimum wage increases. Right? That's a real area of challenge and struggle for nonprofits. And also exempt employees. The threshold for what constitutes the salary threshold for what constitutes an exempt employee is increasing by 7.75% annually. And that's particularly high going up into, in New York City, but there's different rates in New York City and Long Island and Westchester and upstate. And so, we need to think about how we're going to adapt and align our salary thresholds with our salary positions. Um, and also things like comp time, right? There's no such thing legally as comp time. So organizations need to understand that they might be subject to overtime, or you can have some flex time, but you can't have a policy that allows for comp time without paying overtime. Department of State, right? That's where we file our articles of incorporation and our amendments. Um, our name changes, our names, those kinds of things. We are accountable to our donors, right? If we don't express appreciation to our donors, if we don't follow donor wishes, if we don't communicate with and build relationships with our donors, they are no longer going to continue to support us and sustain us. So the board has a really important role in terms of making sure the organization is accountable to their donors. As I said earlier, we're accountable for any local ordinances, zoning, signage, those kinds of things. Any licensing entities. If your facility has a kitchen, right, you're subject to Department of Health regulations, for instance, child care providers, um, mental health clinics, those kinds of things. And then government funders and contractors, right? So, or grant makers in general. So we're subject to complying with those contracts, understanding the obligations, making sure that we have the capacity to carry out the terms of those contracts and those funding agreements. So really making sure that as a board, we are knowledgeable and understand this landscape. And, for those of us with executive directors and staff, it makes it much easier because there's a partnership and you have a paid professional who can help you navigate this landscape. But particularly for organizations that don't have uh, paid employees, it can be really challenging. So, part of it is really making sure you have the right people on your board of directors, that you participate in and are knowledgeable about what's happening in the nonprofit sector in your area of expertise. That board members can bring that information to the board table. Maybe use your committees, maybe bring on experts in different capacities. So ultimately, in building an accountability structure for governance, what we want to do is really define the decision making and monitoring and reporting responsibilities at the board and management levels, right? So it's really about building a team that can take you in the right direction, who's all working together so people know what's expected of them, um, that you can hold people accountable, that people only make decisions that they're authorized to make, right? And all of that is clear so that there's not essentially a chaos within our organization. So we talked earlier about your bylaws and the importance of them, and they're really your primary legislation. That they should be very clear in terms of the rules for how you make decisions, how you bring new board members on, um, how you nominate people, how you elect board members, how you remove board members. Um, and also how you really engage the board in terms of making decisions, how you appoint your officers, and it should define the expectations for your officers and for the committees, and also for executive leadership and management. And it should define not only what their duties and powers are, but any limitations on their duties and powers so that those are clear as well. For instance, your executive committee, some executive committees can act on behalf of the board in between board meetings. And certainly, as I mentioned earlier, there are legal limitations in terms of what they can do, but there may be other ones that your organization wants to restrict or limit the executive director from making decisions related to. The bylaws should define how decisions are made, right, in terms of quorum, in terms of whether you need a majority or a supermajority for decision making, and ultimately, the bylaws serve as a compliance and risk management document that can really make sure that everybody is functioning from the same page and knows what the rules of engagement are. So, again, make sure everyone on your board has your bylaws, that you review them annually with the board as part of an orientation process, and that you think about revising them, periodically, and making sure that you have a legal review of your bylaws by somebody familiar with not-for-profit corporation law. So, just in terms of decision making and action, right? Your bylaws influence your policies, which then influence your procedures. And so typically your bylaws are those that are more sustaining, that they're legal obligations established by the board or your membership. They come from the certificate or your charter. They usually require advance notification, so you can't change them. Say, I want to change our quorum, right, from a majority to, a third. So, because we're not getting the number of people, and you can't do that right there at a meeting. You have to give usually have to give advance notice. Policies are established by the board and don't usually require advance notice, right? So your budget, essentially, you can think of as a policy where you, as a board, authorize the executive director or the organization to spend money in accordance with the budget, right? Certainly, you should have financial policies and internal controls that dictate how checks can be approved and signed, and investments entered into, and loans taken out, and check all of those kinds of things, and bank statements reconciled, right? That personnel policies are typically a mix of policies and procedures. So you might say staff get 3 weeks of paid vacation, and the procedure would be they have to fill out a form, give it to their supervisor, and it needs to be approved 2 weeks before their trip or something like that. Grant making or grant acceptance policies, right? So is your executive director authorized to write and accept grants at their own discretion? Or do they have to get board approval? Are there certain thresholds? Are executive directors allowed to renew grants? But if a grant is going to require the hiring of additional staff, do they have to come to the board for approval? What are those policies that you established in order to make sure that you as a board feel confident that you can abide by any contractual obligations? Your executive director's job description, right, can be seen as a policy. It's the parameters of their job and what they're authorized to do. And then the procedures are usually established by the board, by the executive director, to implement those policies. And the board may want to know that they exist. They may want to be comfortable with them and review them, but they're more of the day-to-day procedures that are required to implement the policy. So part of this is also around being clear in terms of the authority of the board, the limitations of the board, preventing the board from micromanaging. The other part of this is the challenge for those of you who might be all volunteer is to just be clear about where the parameters of the board are and when you're acting as a board member versus when you're acting as a volunteer staff person, right? And being clear on that distinction is really important. So in the sense of how to carry things out, typically, right, the board establishes the bylaws and policy and provides organizational oversight. When you have an executive director, there's an area of shared responsibility with the board of directors. Very often an executive director will recommend the need for policies or question or concerns. And so there's an area of shared responsibility. And then the ED, of course, has responsibilities shared with staff and volunteers for implementing, day-to-day activities. For organizations, and this is, I think, of like an accordion, where the overlapping responsibilities between the board and staff and volunteers in some organizations are all smushed together. Board members act as the board, they act as the director, and they act as volunteers. And in other organizations with extensive paid professional staff, the area of shared responsibility between the board and the executive director might be more limited because of the professional staffing available. And so, part of this is just, again, understanding as board members when you're operating in your leadership and governance capacity, when you're operating as volunteers, and if there are conflicts between the board and the executive director, looking at those lines of responsibility, where they overlap, and defining them and setting some clear parameters so that the expectations of the board and the expectations of the executive director are in alignment, and the board the board feels like they're getting the information that they need, and the executive director perhaps doesn't feel like they're being micromanaged. Just a few thoughts around those organizations with all volunteer boards. So one suggestion is to establish an operations committee focused on programs, and a governance committee focused on governance. And this way you've got different areas of responsibility that can all get carried out. Or you can appoint someone in charge of day-to-day operations separate from the board chair or the president. So maybe the board chair is the leader of the board of directors, and the president or executive director, volunteer executive director, oversees day-to-day operations. They're both volunteer positions, but they have different responsibilities that need to get brought to the board. One thing you can do is to divide your board agendas clearly to distinguish between governance and operations. So you have board business, and then you have operational business or programs down, separately on the agenda, and that you get board members in the habit of distinguishing between those things. Because otherwise, what I often see is boards focusing on the day-to-day. They focus on the next event or the next program, but the governance components get lost, and the bylaws are never revised, or the budget developed, or policies established. The other thing that you can do is alternate board meetings between governance, and working or operational meetings. And I'm on the board of an organization where we do have a couple of staff, but we also have board members who are very heavily involved in the operations, and our board meetings would get hijacked by the day-to-day, the next meeting, the next event happening. And so we decided to have a formal board meeting and then alternate with working meetings where we can do a deeper dive into programs or fundraising or those kinds of things. You also want to clearly identify expectations for governance and board service separately from volunteer expectations. So these are just some thoughts. If any of you have other things that you do as all volunteer organizations or minimally staffed organizations to distinguish between governance and management at the board level, please go ahead and type it into the chat bar, and I can raise that and give that to other organizations as suggestions as we go through the rest of the presentation, because it's a real challenge for many of the organizations that we work with. Okay. So in terms of the governance and policy areas, we're going to walk through briefly these 8 areas. Some of you may see BoardSource has, I think, 10 or 11 areas. We keep personnel and human resources in one, separate from executive director supervision, for instance. So all of the areas are here, and we're going to talk about perhaps how the board can carry out in a pragmatic way its areas of responsibility and what those might look like in terms of best practices for engagement. So, the first area of the board is really in developing itself, that it is fundamentally the board's responsibility for board development, board recruitment, board nominations. And ultimately, what you're trying to do is build infrastructure so that there's a system that essentially is responsible for creating and maintaining and improving, right, the functioning, effectiveness, and productivity of board leadership and governance practices. So the thing to remember is that governance and the role of the board changes and evolves as the organization changes and evolves, right? So depending on where you are in your life cycle, if you're a small organization, a startup organization that's all volunteer, the role of the board is going to very much be focused on rolling up their sleeves and getting the work done, that there's not going to be a lot of emphasis on policies, and that's what the board needs at that point, because otherwise, you can't have policies for an organization that really doesn't exist or have programs or services. But over time, as an organization becomes a little bit more established and is growing and has more money and more resources and staffing, it needs to build its infrastructure, right? And so part of it is really just being conscientious over time that the role of the board does evolve and the people on the board may need to evolve, and the responsibilities will evolve. So really this circle here should start with assessing and planning. That part of it is, once you understand the organization's needs and the goals that you've got for the next few years, that you assess your current composition, your current performance, and you develop a plan for moving forward. And then you nominate and recruit new board members who can help you achieve those goals, who've got the right skills and the right connections and the right perspective. And then when you bring them on, you want to orient them and make sure they understand the organizational culture, your budget, your bylaws, your programs and services, your mission, all of those things, so that they can be effective right off the bat, right? You don't want to just bring them on and then sort of have them sort of left, hanging. Maybe you can establish a board mentor for each board member. One of the things you might want to do is provide training, right? So whether it's once a year you do a training such as this, or you have conversations where you have someone, your treasurer, help people learn how to read your budget, read financial statements, right? Come in and do a training on how board members can be more effective in fundraising, those kinds of things. And then you figure out how to engage people meaningfully, whether it's through your committees or through projects. But you want to keep people engaged. People want to participate. They want to feel satisfied. And when you don't engage people in meaningful work, they lose interest. So that's a really important thing. Once people are engaged, they can develop new skills. They can build their, organizationally, you can build leadership. And then on an annual basis, this cycle continues and you can develop a stronger board of directors that's continually responsive to changing and evolving organizational needs and goals. Um, in terms of the board's role around audit and finance and fixed assets, for those of you who have to have an audit, and those of you with budgets of $750,000 or more, it needs to be either the board or a designated audit committee comprised solely of independent directors to oversee that audit process. One of the challenges, I think, for chartered organizations is that, regardless of whether you need an audit, an outside audit, you do need to have a sort of ad hoc or an audit committee comprised of people who are not on your finance committee. For most small organizations, it is not something we recommend as part of a best practice because it is rare that you have the expertise, um, to have both a separate finance and a separate audit committee, but it is a requirement for you to do an internal audit and think that through a little bit. So, but ultimately, in terms of the board's role regarding finances, you should review and approve an annual budget, right? That I said that's a policy that's important. You should modify that budget as you learn more information about your, income and revenue for the year. That the board should review the financial statements year to date, right? At least quarterly, if not monthly. It really depends on your size of your organization. You should plan for year-end projections, right? That you should make sure that you're managing your cash flow so that you're not going to have short-term cash flow crises, right? You need to be able to know whether you have a cash flow crisis or whether you have a structural deficit as an organization. So part of that is really about establishing financial policies and internal controls to safeguard the funds, right? You don't want the same person writing a check, reviewing your bank statements, reconciling your bank statements, entering information into your financial system, right? You need to have some separation of duties and a checks and balances. And it's the board's responsibility to make sure that can happen. In small organizations, it's very challenging because you don't necessarily have the staff, but you do need to think about it in a way that does, safeguard the organization. And these policies and procedures shouldn't be person specific. They should be organization specific. So, you might trust your current treasurer, but if that treasurer leaves, you get someone else, and they're, cutting checks and there's no checks and balances, you could be really liable for any misappropriations. You want to ensure that your investments and any fixed assets are managed prudently, right? So that you've got a good, if you have, and fortunate enough to have investments, that they are invested wisely, that you're managing the risks associated, right? That you're not necessarily playing the stock market, but you're not necessarily keeping everything in cash, and that you're being strategic about what your goals are and how you want to use that money. And also you want to make sure that, if you have fixed assets, if you have a building, do you have an investment, a reserve for your building, a capital reserve? Are you thinking about how you're going to, protect and preserve your building in the long term? And then do you have adequate liability insurance coverage, right? So maybe the finance committee on an annual basis would review your insurance coverage and make sure that, you have adequate coverage if you've grown, if you've taken on new property or new resources, that your insurance reflects that. In terms of personnel, it's important to remember that the board collectively is the employer, that individual board members really don't have any authority as it comes to staff, right, overseeing the executive director. Usually, but not always, it's the board president who communicates on behalf of the board with the executive director. Um, that it's the board's responsibility to make sure that the organization is compliant with all laws, regulations, and obligations. Um, and that's why having really clear and consistent personnel policies are important. We're working with one organization right now where it was very informal. The board was asleep at the wheel. They have very, no personnel policies, and basically the staff are claiming thousands and thousands of dollars. They have a financial crisis and they're terminating staff in uh, basically unpaid vacation time, right? Because there's no personnel policy, there's no procedure for how that was monitored and tracked. There was no infrastructure within the organization. So it's a huge liability that the organization has without knowing that it had that. It wasn't on their finances. And also making sure that your compensation practices are fair and reasonable and in line with market. And more often than not, in nonprofits, we underpay rather than overpay in terms of the market. But we need to both look at making sure compensation is reasonable at the high end and also at the low end in terms of lower level employees. So what are our compensation philosophy? What's our compensation practices? And then, the board essentially hires, fires, supervises, evaluates, and sets compensation for the executive director or CEO, and allows the executive director or CEO to hire, fire, supervise, evaluate, and set compensation for other staff. And this is a serious risk management area. So you want to make sure that you as a board limit your involvement in personnel specific matters. This clearly, within with certain limited exceptions, right? So things like sexual harassment or whistleblower are areas where the board might need to get involved, but those are larger and rarer situations. The board really needs to make sure that the compensation is reasonable, right? That you perhaps do a compensation review or compensation study, that you look at the 990s of other nonprofits that are similar regionally, similar budgets, perhaps. There are a few compensation studies that are being done. We've been doing one in partnership over the last few years. New York City has New York City specific ones as well. So, the board should really look into the compensation and really think strategically about compensation, because particularly if you have a long-term executive director that you're underpaying with inadequate benefits, it's going to be really hard when it comes to succession planning and finding a new executive director with the same level of skills and competencies. And then what's really important is for board members to understand the lines of authority related to personnel matters. That if staff come to them and start complaining or asking for salary increases or other things, that board members need to be very clear that they need to stop the conversation, send it back to the supervisor or the executive director, because board members can be brought into major human resources, personnel situations. They can be brought into litigation if it comes to that. And they don't want to, certainly around conflicts of interest, can be a real challenge if there's a parent of an employee or a spouse of an employee on the board. Sort of having a good nepotism policy can be really important. But making sure board members understand that they do not engage around personnel matters with staff is really important. Okay, so one area of the board's role is around resource development, right? Whether you call it fundraising, resource development, revenue generation. It's, and this is in many organizations a gray area and also a source of challenge and contention, right? In terms of it's the board's job to make sure that the organization has the resources it needs to meet its obligations, to carry out its mission, but how that money is raised is really about the business model of the organization, right? And so some organizations are, predominantly fee based, some organizations are predominantly donor based, some are grant driven contracts, government contracts, some are a combination of all of them. So ultimately, you know, the board needs to approve a fundraising plan in terms of making sure that the organization has the resources it needs. It should develop policies related to things like their own participation, right? Their own roles, their own giving and getting policies, but also things like making sure that gift donor confidentiality can be maintained, or establishing gift acceptance policies if that's an important component. What you will accept, what you won't accept. Um, and how you define those and how you communicate those to potential donors. Those can be values driven, and they can also be around different, modes of gifts. Whether it's, do you accept stock? Do you accept property? Do you accept collections? Those kinds of things. You also want to think about, how can the board help represent the organization to your funders and your donors? How can the board be ambassadors? Participating in conversations with government officials or other constituents, um, and making sure that the organization complies with the Charities Bureau and IRS regulations, notifications, filings, all of those things. So, uh, you know, this area in terms of the board's role around fundraising is always a challenge for pretty much every organization that I work with. And there are some organizations where the board fundamentally is a fundraising board, and then there are some organizations where the board does some fundraising, but there are paid professional staff who involve them. And part of the challenge is, just really around culture change, around education. There needs to be clear teamwork and cooperation between staff and the board. There needs to be leadership at the board level. There needs to be solid infrastructure at the operations level, whether it's an Excel spreadsheet or a donor database. An organization really needs to make sure that you've got the infrastructure and the communication systems that you need to track your donations, to communicate with your donors, to thank your donors, um, to identify donors, to have a strategy around fundraising, to make sure that the expectations are clear, that you know who you're going after. Are you going after lots of $5 gifts, or are you asking your board members to really be involved in major gift solicitation? What is the best use of your time, board members' time and energies, and where realistically are you, organizationally, in terms of your capacity around resource development? One thing that's really important is to have a fundraising or a development plan, because without that, it's going to be really important to communicate expectations. Things are very vague. People are on the different page about priorities. And so just like a strategic plan is important, a fund development plan is really important that helps articulate, and this is a fundamental tool for board members, that case of support is really clearly giving board members the language and vocabulary that they need to be effective ambassadors for the organization. And as part of that, looking at, why, what you need money for, where you think that money is going to come, what's going to be the result, what are you going to accomplish in terms of your case for support, looking internally and externally about the fundraising reality. What's your capacity? What's your history? What's going on in your community that might influence your ability to be successful? Are you looking for general operating funds, or are you looking for a capital campaign? You know, being very clear who else in your community is doing a capital campaign, how will that influence what you're trying to accomplish, given your local community. And then beginning to identify the goals and strategies that you're using for fundraising, identifying a budget. It takes money to raise money, particularly if you're event driven. Um, how much staff or volunteer time do you need, and what needs to happen when, right? So you've got the timeline and the accountability, and that you spend some time identifying an evaluation process so you know whether the activities were successful, whether you would do them again, what you can do better to improve, make more money, or better achieve your goals, whether they were fundraising or friend making, or media, grabbing, or those kinds of things. So, to the best of your ability, a fund development plan is a really helpful tool, particularly if you're trying to strengthen your fundraising. It doesn't have to be complicated. It can be a single page. It can, include some projections, but it should be something, that really people build consensus around so that you can move forward collectively. The other area is, about the board's role in stakeholder and community relations, is that board members really are important ambassadors, and they bring ideas from the broader community to the organization, and they reflect the organization back to the community, and their spokespeople, informal spokespeople, they identify, with their local community or constituents, to make sure that the programs and services that you're offering are reflective of people's interests and market needs. And, essentially, you're working to enhance the organization's public image, to get out there, to build relationships, to, make sure that there's a positive image of the organization, and that there is an image of the organization. A lot of times, the biggest complaint I hear from organizations is people just don't know we exist. And that's a really great opportunity for board members. Can they go and speak to your local, Lions Club or Elks, or go to the Parent Teachers Association, or whatever groups are most appropriate for your organization? Um, and can they effectively advocate, right, for the organization? And again, this is an area where organizations often take for granted the board members' ability to be ambassadors, and that they don't do the work necessary to give board members the talking points that they need in order to be those effective advocates or ambassadors. So, really think about this. Really define and communicate your elevator speech and your elevator question. Help people practice communicating about the organization's mission and the events and activities that you've got going on, and why you're making a difference in the community. And know who they should build relationships with, right? Being clear about, if board members are connecting with people, knowing why certain folks, a school member of a school district, might be a good ally in accomplishing some of your goals, so that they can begin to advocate and build those relationships. So strategic planning is a really important and great tool. As many of you might know, the DIPSNY program is really working with organizations to develop strategic plans. So there's consulting services available for anyone who hasn't yet participated. But strategic planning is, a really good tool for creating and building a strategic culture within the organization to keep what you're doing fresh, to keep it relevant and meaningful, making sure that you are setting a goal, that you know where you're headed, that you're all working in the same direction. So you develop that vision, and then you develop a plan for carrying out that vision with strategies and accountabilities for accomplishing it, right? Um, it's a really great tool for generating enthusiasm both internally and externally among your stakeholders, among your constituents and donors. Um, so it's really a valuable tool internally and externally. And the strategic plan really can help you monitor your progress and revise, change course if necessary, if you're not being successful, and just sometimes organizations go and go and go and go, but they don't have a structure or framework for knowing whether they're moving forward. And a strategic plan can really just define that for people and then enable you to look back and say, wow, we've really done a lot. We've accomplished so much that we set out to do. And so it was strategic and intentional, and it wasn't an accident, and now we're going to move forward and accomplish even more. So if you haven't developed a strategic plan recently, definitely encourage you to think about it, apply for the DIPSNY program, reach out to Anastasia, and learn more about how the program might be able to help you. As I mentioned, it's a tool, right? So it can motivate and unify you, get people on the same page. It can really just give you the time that you need out of the day-to-day operations, out of the grind of board meetings or committee meetings, to be creative, to strategize, and just to spend time thinking about all of the possibilities, to be really, creative and have fun in a different way. It is also a really important tool for getting in future investment. You can share it with your donors, you can share it with grant makers, you can share it with government funders, with potential board members, and basically get them to buy in and support you in whatever way they can, or help get new volunteers. And as I mentioned, it's a good tool for monitoring, to help build accountability, to communicate accountability and expectations, and also to demonstrate your results. And not unimportantly, the board wants to know that you're making an impact in terms of your mission, right? So how do you think about making sure that your programs and services are directly tied to your mission? Do you have an understanding and a framework for that? Are you reallocating resources according to how well you think certain programs and services are tied to your mission? If you're an organization that is predominantly about, let's say history, and you're doing musical performances, contemporary musical performances, and those performances are, bringing in new audiences, are generating revenue, are giving you media attention, generating new memberships. There's a clear case for something that may feel a little bit not core mission activity, but supports your overall mission. If you're doing activities that may or may not be tied to your mission, but those are draining resources, you really need to think about that, and revitalize how you're prioritizing. And sometimes it's getting rid of those sacred cows, or those events or activities that you've always done because so and so really likes them, um, but they really are, draining the organization's resources away from its mission impact. As an organization, right, as a board, you want to make sure you've got program policies in place that protect your, stakeholders, your visitors, your collections, that really make sure that you're open and accessible, perhaps, to your stakeholders and your audience members, that you're really ensuring consumer protection, that you're meeting your contractual and regulatory compliance, um, and that you can basically somehow have a practice in place that demonstrates your mission based outcomes, right? And so, that might be surveys of people who have participated, that might be, just sort of quality measures or surveys for the various activities or events that you're doing. But really thinking about from a board perspective, how do we know that we're making a difference? How do we know that our programs and services are good, solid quality, that they're interesting, that they're educational, that they're meaningful, that they're helping us achieve our mission? So, really think about that and really think about reviewing your programs on an annual basis so that everybody understands what you're trying to accomplish, what your goals are, and to make sure you're doing that in alignment with your organization's budget so that your budget is in sync with your mission as well. Okay, so obviously many of you have facilities, all of you probably have collections of some sort or another. And what's really important is to make sure that you develop and implement policies and procedures, that protect the long-term integrity of your facilities and your collections. So making sure you've got, security systems and security policies, um, making sure that the storage of your collections are as good as that they can be, including things like climate control. I know that those are real challenges for many, many organizations with collections. But just continually looking at how you can improve them is really important. Making sure that you can that your collections are available for display, that you have documented what you've got, that you can display them safely, and periodically, and perhaps share them with other institutions so that they can be made available and they're not just hiding in your barn or storage facility. And then, of course, making sure that you're fostering the preservation, accessibility, and utility of those collections or the data related to them. Just, that's part of the display, but really keeping them vibrant and available in terms of your ability to document your collections and communicate them to stakeholders. So you know what you've got and they know what they've got, and you can use them to tell your story and carry out your mission. So that is it for our presentation. If you have any questions, you can, I think, raise your hand or enter it into the Q&A bar.
Yeah, we are here. It looks like there is one question.
I'm not seeing the question. Can you read it?
Let's see. If board members are not following the bylaws, can the president hire counsel to enforce the violations he is required under the bylaws to enforce?
Yeah. So, I mean, that is certainly a conversation that should happen at the board level, just in terms of importance of following the bylaws. Um, and I think in terms of whether you hire counsel or get legal counsel and advice brought to the board in an advisory capacity first, right? So, avoid being litigious around things is my first, level of advice, and try to educate and engage people, find out, why the bylaws are not being followed. Is it a blatant violation? Um, and also, it really is. It's both the president, but also the full board's responsibility to hold board members accountable. So if they're, if a board member is violating the bylaws, what does your bylaws say about removing a board member? And otherwise, you also might need to think about changing your bylaws if they don't provide the guidance that you need. But certainly, sometimes getting some outside advice will also often come in and facilitate conversations among the board, or help organizations revise their bylaws so that they can be compliant. Certainly, even just doing it from an educational perspective, bringing in an attorney to make sure that board members understand why it's important, and for the president to make sure that the board is holding board members accountable is certainly a fundamental part of their responsibility. So, whatever approach makes the most sense, I think bringing in outside assistance can be helpful.
And do you see I assigned another question there? It says, can you provide a couple more examples of engaging the public with community relations?
Sure. So, I mean, I think this is a fundamentally important thing that nonprofits need to do. That, particularly those organizations that have collections, right, that are all about telling stories and presenting information, and materials. So, if you're a membership organization, I think starting with the members, right? I mean, regular and routine communications, right? How's your starting with things like your website is a fundamental thing. Do you have a brochure? Do you have an email listserv? Um, do board members go out and build connections and relationships, and find out what people might be interested in? Do you hold community forums, where you bring together people who might have an interest in the work that you're doing? Um, and this could be part of strategic planning, or it can just be part of community building. But really finding out from people, bringing them in, asking questions, doing surveys. You can use SurveyMonkey to engage people. Just going out and doing talks and presentations at other local groups, um, having coffee with a staff member or board member from another organization, another museum or historical society or school or university, um, hospital. I mean, really thinking broadly and strategically about how the partnership can happen, right? Because what's your case, right? What are you trying to get people to do? What are you trying to sell? I think nonprofits really need to think of ourselves in a marketplace, and that if we don't have anything of value or can't articulate why what we have of value that is of value, in a way that other people resonate with, there's not a lot of there, right? For many years, we had a museum board empowerment program. We did trainings across the state, and there were historical societies that were, they had a barn full of stuff, um, and the board members themselves were all, sort of in their 80s, and there was no effort to build the relationships with schools, um, or with other people who might take on the charge, right? That the outside only saw rusty farming equipment. They didn't see the vibrant stories that the people who were part of the organization saw. So really looking at, the communications and the storytelling in new and exciting ways, um, is vitally critical. And building relationships is going to be part of that. Finding out what people's interests could be, and how you can meet those interests. Taking an outside in look at your organization.
Craig asks, we have a constitution and bylaws. You didn't mention constitution. Do you see this as an extension of the bylaws?
Uh, so most organizations, I think, like the Constitution is kind of like a preamble, if you will. My guess is the organization's been around for a while. It might reflect kind of what's in your charter. I think there's a question of, I mean, certainly, I'm not a lawyer, so in terms of what that Constitution reflects, I'm not clear about what's in, certainly not what's in yours. But my guess is that there's some reference from the bylaws to the Constitution. And ultimately over time, what you might want to do is just integrate them. There might be some redundancy there. It's not, it's not necessary to have a Constitution. So you could just integrate them. But I can also find out a little bit more about or you can email me directly and I can get you some information from our legal team who have probably worked with that more closely.
That appears to be all the questions at the moment, unless anybody has anything else. Carol asks, are there models of successful all-volunteer organization boards where governance and operation are clearly defined?
This is an area that's a real challenge, and part of the reason I wanted to include some of that material here. It's an area that is it's hard to pin down because every organization and group of people function a little bit differently. I can I can probably share with you some articles and some materials that would give you some direction around that, but ultimately I think it's really about kind of the art of creating that model that will work for your organization given your culture and your approach. So feel free to email me, and I'll be happy to send you some stuff.
Bill has a follow-up. Are there any recommendations on attorneys skilled on bylaws that you might recommend to us?
So NICON, the New York Council of Nonprofits, where I work, does have attorneys on staff. We do a lot of work with bylaws. We also have folks like myself who are, the practitioners. And so one of the challenges in using just an attorney, in my experience, is, they think about it from the legal component, but they don't necessarily think about it from the practical component. And so because we take an interdisciplinary approach, I think you'll ultimately get a better product in developing the practices that are probably best suited for your organization. So you could just, email me again and I can walk you through that process or talk to you about what you might be looking for.
There are no other questions at the moment. We could wait just another second if you want, Susan. Bill is asking for your email address.
So it's on the first slide, with, but it's S. Weinrich, SWEINRICH, at Nikon, NYCON.org. And you'll get it when the slides are sent out to you. And just in general, our website is nikon.org, NYCON.org. So you'll see what resources we might have available there.
Bill says, great presentation. Many thanks.
You're very welcome.
If there are no other questions, we could wrap up when you're ready.
Great. Well, thanks everybody, and have a lovely afternoon.
Thanks, Susan.